Hey, it's David from the Miserly Crab, and today we're going to go over 3 different technical indicators you can start using to improve your day trading in cryptocurrencies and stocks. We'll discuss trading volume, moving averages, and Bollinger Bands as ways to make more informed trades. Volume is really important as a means to confirm upwards trends or downward trends in a market. Not every time are we going to see that volume is going to directly correlate with what's going on in the stock price. And so as I go through this video, it's important to note that none of these indicators should be used alone. They're merely tools that you can add to an experienced trading strategy. However, we can see some cases where, for example, right here, increasing volume of a closing price that is lower than the opening price. We see this reflected in the downward bearish trend of the stock price. Let's now jump into Bollinger Bands. And so right here, this chart is set up for Apple with a couple different Bollinger Bands bordering the chart. So we have an upper band and a lower band, and these are defined by one standard deviation from the stock price. Now what these bands allow us to do is see the relative strength of the stock price with respect to its moving average, which is called the basis band, which runs through the middle of the 2 Bollinger Bands. So Bollinger Bands come in really handy when you want to be able to see, so how has the stock been doing over time, and where do I think it's going to go in the future? So looking at this bearish trend reversal right here, we can see that when the stock price exceeds the upper Bollinger Band, that often means that you are in an overbought condition. And so we see right here that we hit a peak of $145.09. As a result, we start to fall towards our moving average basis band. And in fact, we continue to fall all the way to the bottom of the Bollinger Band. Now, this kind of indicator is harder to use in practice because let's pretend that this is happening in real time. So if we look over here at the right of my screen, so we don't know what's going to happen next. These bands are drawn in real time. So all we could do is see that, hey, this is exceeding the Bollinger Band. Maybe it's time to sell our stock and take our profit. But we wouldn't necessarily know that it was going to decrease as far as it actually did. But for shorter term investments or day trading, this can be a useful strategy. It doesn't necessarily have to exceed the upper Bollinger Band. But if it gets close to it, you can see still that maybe this is in an overbought condition. Conversely, if we look at the bullish trend reversal example, we can see an example where the stock price descends towards the lower Bollinger Band. And as it gets down there and starts to touch, we see a trend reversal as we start to move back up in price. Now here's another tricky part right here. So we see that this right here, the stock price descended through the Bollinger Band. And we might have thought, hey, that's a great time to go ahead and buy into this security. But in fact, it did descend even further. It would not have been a perfect catch of the bottom of this trend. I think that's something to acknowledge in trading strategy, in that you need to have some level of discipline in order to overcome your trading emotions, such that if you were to have bought in right here because of your Bollinger Band analysis, that you would go ahead and hold because you believe that the market trend will reverse based on its position near the Bollinger Band. And as it continues to stay near the Bollinger Band, it eventually does have a reversal. So again, discipline is very important in these trades. Let's move on to moving averages. These averages are rolling averages of the stock price over a certain period of time. So this dark yellow line indicates a moving average of 120 days, while the blue line indicates a moving average of 30 days. So as we get into these indicators called the death cross and the golden cross, these moving averages become very important. Similar to the Bollinger Band, moving averages are used to price the current stock price of a security versus the relative strength of that security over time. So what we see right here is a case where the 30-day moving average descends below the 120-day moving average. When this happens, the stock may be entering a prolonged downward decline, and this is known as the death cross. When we come over and see the opposite is true, we see the moving average, the 30-day moving average, is crossing the 120-day moving average, and it is succeeding it from down to up. In this case, we call it a golden cross. This is usually followed by a prolonged period of upward trend, and we see that here in this example. Here we are again with Apple, and let's see what this chart shows us. So on this chart, we have the moving 120-day average, we have the 30-day moving average, and we have this basis band within our Bollinger Bands, which are also added on the chart. So using these same examples that I had before, a bearish trend reversal and a bullish trend reversal, let's see how we can tie volume, Bollinger Bands, and moving averages into an informed idea of what's going on with this security. So let's say we're right here. Today is January 20th, 2021. The stock has risen this much in percent. It looks like a pretty nice rise today. So let's think about where we're at. Well, we're currently right in the middle of the Bollinger Bands. There's not a whole lot known here about how prolonged this increase is going to last if you just look at this day. But if we move back a little bit before and we take a look at these moving averages, let's see here. So what do we have? Well, if we go back to the last time the moving averages crossed, way back in May of 2020, the 30-day moving average crossed above the 120-day moving average. This is our golden cross that we discussed earlier. This often describes a prolonged increase in the stock's price. We do actually see that this occurs, and as we're headed up, we still see that we should be in some kind of upward decline right here on January 20th, as the 30-day moving average is still above the 120-day moving average. Now at this point, I would start to get a little bit concerned, maybe this trend isn't going to last forever. And as we start to rise higher towards this upper Bollinger Band, we need to start thinking about when is a good time to exit our position, if we have one in Apple, what are some signs that we can start to look for. And so right here on January 20th, we have, relative to other days, we have about medium volume. So this is still a kind of an uncertain day. Let's say we wait until the next day, we're still holding, and we see that we've now hit this upper Bollinger Band. And look how high the top of this candlestick goes. So we're now exceeding the upper Bollinger Band. And as I said before, I think discipline is important, and maybe you won't always catch each trend reversal perfectly. And so I'm going to say on January 21st, let's go ahead and sell our Apple shares because we are exceeding this Bollinger Band. And hey, you know what? I think that's an indicator that our trend is about to be reversed. So let's say we sell. Well, hey, look, this next day we got even higher. Our closing price was at $139. Kind of a bummer. We missed out on a bit of profit, but you know what? I'm okay with that because we're following a trading strategy. The next day, we go even higher. It's 145, but it turns out that we actually drop lower, and we can confirm that with our volume. Check it down here. Look how high this volume is increasing. This is a sign that a trend reversal is very near. We still have the 30-day moving average above the 120-day moving average, but we have high volume indicating that the stock is overbought. Now, as we go into the next day, we are still having a closing price lower than the opening price, as shown by this red candlestick, and we have more downward volume trending. We're also still at the top of the Bollinger Band. Next day, we're still decreasing, and then we see a big sell-off. So now this is confirmed by high downward volume. And we're in the middle of the Bollinger Band, and we're still seeing this high of downward volume. Well, maybe, we need to wait a while before we try to get into this stock again. And so we keep going on. You know what? We just keep descending. But then something interesting happens. The basis band actually crosses the 30-day moving average. The basis band is a moving average that is even a lower time scale than the 30-day moving average. It would depend on how you set up the chart as to what it is, but this particular one is lower, and so we actually see its own little death cross right here indicating a longer period of downward decline. So we come down even further. We actually see our 30-day moving average cross our 120-day moving average, which is again another sign of downward decline. But the interesting thing is, because this is on such a short time scale, what this trade that we're looking at, it actually is not a good indicator at this point. And we see that followed up by a quick reversal, and now we have a golden cross. And so this kind of zigzag back and forth means you should have some caution when using moving averages as indicators with golden crosses and death crosses. And you need to really take a more holistic look at what's going on in the marketplace and everything in general. Sometimes it's easy to get lost in technical analysis, so make sure to bring your head above water regularly to monitor market news events. And there's really no easy way to use technical analysis for every time foolproof trade. A mixture of technical analysis, experience, and market condition awareness are needed to be successful. This takes time to develop as a trader. Luckily, brokerages like Webull, that I'm using here, have a built-in paper money trading feature, which lets you trade virtual money with no risk to your actual account. So you can practice with all the indicators that I've shown here and do all of the same trading with virtual cash. Even better, Webull has free commission trading on stocks and many cryptocurrencies. If you use the link in the description, you can get free stocks whenever you sign up for Webull. Thanks guys, see you next time.